Hello everybody, my name is Elish Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending August 12, 2022. Looking at the indexes for the week, the TSX, S&P 500, Dow Jones, Russell 2000, and NASDAQ were all up, with the last 3 days of the week being stellar following the Consumer Price Index announcement in the US. This illustrates the importance of being invested because if you weren't, you'd have missed out on the 3-day run. My portfolio was up 3% just for the week. Gold and oil prices were also up for the week, oil mostly on the expectation of no recession and more consumption. Now, just a quick note, in the summer months, take the market movements with a grain of salt, since you can get large share price movements. The volumes are typically low because most of the traders are on holiday, and so a small player can move a stock significantly. In September, when everyone is back to work, things will be back to normal. So the big headline story was that on Wednesday we had the US Consumer Price Index numbers, giving the US Fed an idea about how inflation is moving. Year over year for July was 8.5%, less than the expected 8.7%, which made the markets happy. The year over year for June was 9.1%, so inflation is slowing. Any thoughts of an inter-meeting raise before the September meeting are off the table, and a 0.5% or a 0.75% raise is looking likely so far in the US in September, with the 0.5% the likeliest. The stagflation scenario with inflation and a deep recession also seems to be less likely than previously. The price of gasoline on both sides of the border has been coming down, somewhat together with the oil prices. Energy and food are the most volatile components of the CPI. Oil prices are being brought lower by the Western talks with Iran over their nuclear program. The talks will take months, but if agreement is reached, an extra 1 million barrels per day will be brought onto the general market. U.S. producer prices have decreased 0.5% in July, another sign that the inflation has peaked. Food prices dropped significantly in July from previous month, particularly the cost of wheat and vegetable oil. This is because of both demand and supply reasons. So, just some things that played a role. Number one, the United Nations Food Price Index, which tracks the monthly change in global prices of food commodities, fell 8.6% in July from the previous month. Number two, wheat, soybean, sugar, and corn futures have fallen from their March highs to prices seen at the start of 2022. Cereal prices, under which wheat falls, are down 11.5%. Vegetable oil prices fell by 19.2%, and sugar prices dropped by 3.8%, while dairy and meat prices dropped by 2.5% and 0.5% respectively. Number three, the Russia-Ukraine grain agreement helped cool the market along with better harvests in the northern hemisphere. The first shipment of Ukrainian grain since the invasion left the country's southwestern port of Odessa last Monday. Number four, at least 30 or 40 shipments per month will be needed to get the existing grain stored in Ukraine out, and the deal will need to hold on steadfast between now and December, since that is when Ukraine does most of its food exports. Number five, the higher US dollar also helped to lower the price of staples, and news that the US and Australia are set to deliver bountiful wheat harvests this year also helped to cool the global food market. Another reason staples have become cheaper is that traders and investors are pricing in recessionary fears. And finally, number six, no one knows how long this significant price drop will last, but for now, this is great news for everyday consumers who have been battling inflation. Turning to Canada specifically, there have been mortgage worries in Canada. Analysts will need to look at who has fixed mortgages and how many people have variable mortgages, and of those, which are fixed payment and which are variable payment. The latter could cause problems for the holders. Expect that mortgage volume will slow down some, but there will be better margin for Canadian banks as there is a bigger spread between the savings account interest and the mortgage interest. There won't be a total shutdown of the mortgage or the real estate market in Canada. The next Fed meetings on both sides of the border are in September. Canada lost jobs in July, while US got more than expected new jobs. The market is looking at a 0.75% raise possibility in the US, while Canada it could be more muted because our economy is not doing as well as the US by the jobs metric, and so doesn't need as much slowing. The just-in-case inventory theme is continuing in real estate, specifically commercial warehouses, replacing the just-in-time inventory we had prior to all the COVID-related supply chain issues. Now, companies worry they can't complete their products because they are missing one small part, and will keep more parts inventory on hand. Looking at next week, the earnings next week, the US earnings continue and Canadian earnings are beginning. On Tuesday, we have Walmart and Home Depot reporting, and on Wednesday, it's Tencent. Next week's economic events include on Tuesday, Canada having the CPI reporting meeting, which will be instrumental to the September central bank meeting. On Wednesday is US retail sales for the health of the consumer and staying out of a recession, and the same for Canada on Friday. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.